Shares of NXP Semiconductors gaining more than 40% this year. And Raymond James says there is another 11% upside ahead. It's our call of the day. Does the desk agree? Steve Weiss. Do you?
I own the Smash and I own Skyworks, and that's enough, so I'm participating. 11% doesn't get you terribly excited. Any stock can be up or down 10%.
No, but I mean after 40%?
Look, I think the semis keep going. I like them, particularly with Huawei. If you keep relaxing on them, it'll go. But I like the sector. The only place you're going to make money in this market, or the best place to make money, I should say, is in growth, and you still have growth in those. Now, stay away from the commodity stocks, but NXP, sure. I think it's
so
a nice
for you to believe that NXP can return to the highs, and it's actually traded relatively well considering it's had 4 consecutive quarterly declines because of automotive. So you have to believe there's a cyclical bottom in the automotive component, which is the biggest revenue driver for NXPI. The cyclical bottom is not really about North America. It's about Europe. It's about China. If you believe in that, then yes, you follow along here. You go with NXPI, takes out the highs. I would offer you're better off in Texas Instruments until you get confirmation of cyclical bottom.
You've also had consolidation in the providers to the autos, so that's helped. Diode's another one.
I think it's an interesting point to decouple the cyclical semiconductors from some of the secular growers, because we do think that semiconductors is one of the best ways to position for a lot of the secular growth that is happening in 5G, that is happening in artificial intelligence, and so forth. So I actually like owning semiconductors here because we did get a bit of a reprieve from Huawei, but also it's the data center spending. This quarter really slowed to about 7% year-over-year growth rate, and next quarter we're expecting it to pick up to about 21%. So a couple of that with a bit of a trade war reprieve, I think you have a strong case for semis.
108 is resistance. If it gets above, the stock probably doesn't have any resistance till 120. So I think from this level, decent risk reward. But if you wait before pulling the trigger, if you're a trader, probably better off. If you're an investor, 1% dividend yield is not much. 14 times earnings sounds cheap. There are a lot of semiconductor companies selling for less than that. And I agree with your comments. It's hard to get excited about cyclical semis and the ones that really need a strong economy, and you're just not going to get it. So
what's your
there
thought?
are other names I like better.
Just give a quick thought on NVIDIA, just because we mentioned it earlier.
I'm long.
Coming off the really strong earnings, stock's up another 6% today.
Yeah, it's coming off strong earnings, and last year there were a lot of missteps in terms of guidance, and the stock basically fell off a cliff. But it seems to have been in a bottoming process for a couple of months. Has not broken out or anything like that yet, but if you're long, you're feeling much better about it right now than you did earlier in the summer. But I think that it looks exactly like 50 other chip stocks I could give you. Like it hasn't differentiated itself lately. A lot of them seem to be asking this question: are we global recession or not? And that might determine the next 20% for their share prices.
It's also a magnet for speculators in the chip space. It's one that people love. They understand gaming in particular.
It moves.
So they keep going to it. It moves, they get rewarded.
Are you confident that's the bottom in gaming?
No.
I'm not comfortable that it's the bottom in data centers either. I mean, it's been a rough year for them, rough year and a half. DXC, which I just bought, is shutting 3 data centers. So I think it's, I'd love to see it come back. I think it will as 5G rolls out, though. Yeah. And I think that's where the strength will be.
But I think NVIDIA is one of the examples of the secular growth opportunities, because it used to be a gaming stock. Now it is more about AI and so forth. And we have the Hot Chips conference in California this week. So a lot of these AI chip-sensitive companies are getting some notice.